Every so often, we'll see a stock that has a meteoric rise in price and causes a buzz in the world of investing. One of those stocks is Alibaba, which has surged over 50% in the last month and around 20% in the last week. And today we're going to do a deep dive into Alibaba. We'll analyze the financials and key catalysts driving this move, examine what super investors are doing with Alibaba, particularly Michael Burry's massive bet on the company, and I'll provide my thoughts on the company and position in my investment portfolio. I'll be using my investment analysis platform to analyze the fundamentals of the company and its competitors. If you want to follow along, you can try it out for free. The link is in the description. So, Alibaba's share price has shot up over 50% in just the last month, but a surge like this generally doesn't come out of nowhere. So what's driving it? Well, Alibaba's long-term performance has been a roller coaster. Since its IPO back in 2014, the stock has only returned around 26% in capital appreciation. They have recently started paying dividends, with the dividend yield sitting around 1/3%. So if you'd been holding this stock since its IPO, you wouldn't have achieved a high return or dividend yield from holding the company. And this is despite revenue growing more than 10 times and free cash flow increasing 5 times. So there's a discrepancy there that has pushed Alibaba's price to free cash flow ratio down as low as 8 to 10 times at one point over the past 3 years, making it look like a value stock. So what happened? Well, in late 2020, Alibaba peaked at over $300 per share, fueled by strong growth and excitement over the upcoming Ant Financial IPO. The Chinese government intervened, blocking the IPO and tightened regulations on tech companies. This and other regulatory crackdowns triggered an 80% decline in Alibaba's stock price, bottoming out near $60 per share in late 2022. Investors lost confidence due to the regulatory crackdowns, geopolitical tensions, and slowing growth. So why the massive increase in share price now? Well, I think if we narrow down the time frame to after the drop in share price, that'll tell us a bit more. So I'll narrow down the range to 5 years. Now, looking at the revenue growth, there was strong growth prior to 2022. However, over the last 3 years, there's been fairly low growth of around 5%. Now, it's not the growth in top-line revenue that's driving these gains. Well, maybe it's the cash flow growth then. So if we go over to the cash flow, we can see that it's actually been decreasing over the last 5 years. Though I will say the stock-based compensation is trending in the right direction and has more than halved in the last 5 years. So it doesn't look like it's that, and margins and cash conversion is actually down. Looking at the price metrics, after the price drop in late 2020, the price to free cash flow has been trading around or below 16 times, so fairly low compared to where we've seen other stocks trade over the last few years. One of the things that we can do as well is compare Alibaba to other companies like Amazon and see how they line up. So we'll pull up Amazon as a comparative, and this will be scaled so that the figures are comparable. So looking at the two companies over a 10-year period, we can see that both companies have performed fairly similarly over this time frame. There are some things to note though. We can see that Alibaba's revenue prior to 2022 grew a lot faster than Amazon's, though Amazon's revenue over the last 3 years has been growing twice as fast as Alibaba, and Amazon has been growing its earnings a lot faster than Alibaba. Looking at the free cash flow per share growth between the two companies, we can see that they are fairly similar. However, Amazon's share price has increased by over 1,000% and has a price to free cash flow that is 4 times higher than Alibaba. So there is this disparity between prices. So Alibaba appears to be undervalued relative to its peers and metrics, and this might be the market re-rating the stock. But let's look beyond the numbers to understand why this rally is happening now. Looking at the news over the last months, several key developments have propelled Alibaba's recent surge and sparked broader optimism across Chinese tech and AI stocks. A few weeks ago, the release of DeepSeek's innovative AI model sent ripples to the market, demonstrating that Chinese AI development is rapidly matching and in some cases rivaling US advancements. This breakthrough has fueled a rally among tech and artificial intelligence stocks as investors see compelling evidence that Chinese firms can compete on a global scale. Behind the rally lies mounting confidence in Alibaba's ambitious efforts to develop its own AI services and platforms. DeepSeek's unveiling, which triggered significant volatility on Wall Street, has put Alibaba in the spotlight as investors believe its initiatives could translate into more tangible and well-established earnings growth in the medium term. And more recently, just this last week, there was an announcement that Apple is partnering with Alibaba to roll out AI-powered features for iPhones sold in China, which has added another layer of momentum. This collaboration is expected to enhance Apple's competitiveness in the Chinese market while simultaneously validating Alibaba's AI capabilities. It's a significant endorsement that further fuels investor enthusiasm for both companies. In summary, these catalysts are fueling a surge of optimism that is prompting a significant re-rating of Alibaba's stock, pushing its price higher as the market bets on growth in Chinese stocks. Shifting focus to the moves that super investors have been making, Michael Burry's significant investment in Alibaba stands out. The legendary investor behind The Big Short has allocated over 25% of his portfolio to Alibaba by purchasing its US traded ADRs. Building this position steadily since 2023, Burry's commitment has added weight to the argument that Alibaba is markedly undervalued, and with the size of his position, he is already sitting on substantial gains. Beyond Burry, a total of 5 prominent super investors have taken positions in Alibaba. Among these, David Tepper is particularly noteworthy. Tepper has initiated his position in the most recent quarter, and Alibaba now constitutes his largest holding. Given when he entered his position, I expect he has already achieved around a 50% gain on his investment so far. David holds a few other positions I like. Some of these major holdings are Amazon, Microsoft, and Google. He also holds a variety of other Chinese stocks. Taking a step back and looking at some of the risks, Chinese stocks have a notorious reputation for trading on sentiment. Geopolitical tensions, regulatory uncertainty, and ongoing concerns around accounting transparency all add additional layers of risk. History has shown in 2023 and September 2024 that positive momentum can quickly reverse, so investors should be cautious of potential sell-offs, though the current momentum is encouraging. I'll also add in general that holding stocks that trade based on market sentiment come with an opportunity cost. If you tie up capital waiting for a recovery, you might miss out on a better growth opportunity in other companies. For example, comparing Alibaba to its price 3 years ago, it has returned no gains, whereas a company like Microsoft has returned over 40% in capital appreciation and dividends. So what am I doing with my portfolio? Well, I recently trimmed my Alibaba position, taking a loss to offset gains from selling Apple shares, which I did for tax purposes. However, I still hold a small stake of around $1,000. If the stock trades up to a more reasonable price to free cash flow ratio based on this current momentum, I will likely trade out of this position and reallocate this capital into 1 or 2 other companies that I think have better long-term risk-adjusted returns. In summary, if Alibaba and Chinese stocks can maintain this positive sentiment, I think the stock price will continue to increase, though I am cautious of unforeseen shifts in sentiment. That's it for this episode. Let me know what you think in the comments about Alibaba's recent price action. If you found this analysis insightful, hit that like button and subscribe for more stock investing news and tips. I'll see you in the next one.